Good morning, everyone. Welcome to our Friday morning trading session. TGIF and all that. Woohoo! We made it. Made it to another weekend. Okay, so the market's just opened. Let's take a look here at the Raptor, see what's going on. The overnight fairly choppy again. There was a little bit of a rally here through the Asian session after the market closed yesterday. Asia opened and we actually got this breakout here on the Raptor among other tools. There was a rally until the European opened, and then the Europeans weren't quite so sure and the market just waffled a little bit. Brings us to this morning's open. Oop, where is it? Here we go. This morning's open, and we've actually got a little bit of a gap now here below the market, but we are looking kind of range bound, really. I was going to say bullish, but we'll see. It's only going to be bullish if, of course, they don't try to fill that gap early, but it is early, so let's not get too excited here. Do something silly. Here's the hawk. You can see all these yellow bars. The market's still quite range bound. They're trying to go higher, and now we're producing a green bar sell, so no doubt they will try to sell lower here. How long are we into the session already? Oh, it's only a couple of minutes. Well, if you wanted to test the water, so to speak, you may go in here with a single contract and probably try to run this one out, see if they don't get down here toward the lows again. We'll eliminate the break even, and this is, again, very early. Sometimes you get lucky. It's pretty much dead in the middle of this trading range that we're looking at. So from the high up here to the low down here. As far as the morning session goes, though, I think we're near the open or near the high. Yes, we are. So we're trading right at the highs of the morning. And here too, you can see the conflicting signals. The Raptor looking bullish, the Hawk bearish, the Falcon very indecisive, and the Eagle, well, the Eagle, if I had to choose, I'd say it was a little bit more bullish right now, coming out with this red bar buy signal. But again, don't ignore the whole context, namely that we're very much sideways. All right. The green bar sell, of course, is one of those signals. We could also have bought this one, so that would have actually made it in sync with the other ones. Crude oil also trying to get a little bit more bullish, and it does look like it's going to be a little bit of a bull market now. So we'll see if they're going to allow me to ride out this little swing. And all I'm doing is I'm moving my stop above the high here. And the reason I'm doing that is I don't want to get tagged by one tick. We're near the overnight highs now, and this is where we anticipate the sellers are going to step in, right? This is the top end of the trading range. And now as the sellers try to get more aggressive with the market, I'm going to also try to roll my stops down, if they don't stop me out first, that is. This is precisely why I went in here with just a single contract. But a pretty strong looking start to the day, providing, of course, we get outside of that trading range. All right, so here's the hawk now, first micro-macro cross signal, near the top end of the range. So if you're going to enter this signal, you really do need to try to cover it pretty deep, at least to the crest here in the macro line, or the dip in the macro line would be my suggestion. And maybe even delay your entry until it takes out the high of this bar right here. Crude's looking like the same thing. Well, same thing but different. Here's crude on the hawk. We'll just take a quick look. Nice little first micro-macro cross right here as the North American stock market opened. Crude oil itself opened a half an hour earlier, right around here, to a rather sideways looking day. But then we had this little higher low and a first micro-macro cross that would have been worth attempting, and no problem hitting the scalp target. There'd be a lot of traders up here shorting because of the overnight low, hoping to sell the high of the morning. Gold now with a rule of three type setup. So we've got a bullish band, 1, 2, working on the third signal lower. It's going to print right here, right there. There's your rule of three. Can I cover it above the high? Oh, I can. Now, the rule of three shows you a market that may be breaking down on its trend. So first of all, you have to have something resembling a trend. You can't be breaking down on the trend if you don't already have a trend in play. So here we've got a bullish band. It's been bullish for, looks like about 5-6 hours, something like that. The market makes another leg higher, comes down, and now it's retesting the highs. It managed to get about that high, about halfway, and now it's coming down and it's trying to retest the lows. Will it recover the lows and continue higher, or will it fail and head lower? Well, we don't know just yet. But right now, if it breaks down through here, we're going to produce 3 counter trend signals. That's our rule of 3 setup. The rule of 3 must always, always, always be preceded by a retest of the high, or the low, as the case may be. So you could enter here on the hash mark. We're getting a second push on this entry, which all that means is the market has come down. It's engaged the signal, and now it's retreating away from the signal. Or you could enter below this low, where there's obviously a little bit more buying and selling activity. You can tell from the width of the bar. I'm going to opt for the earlier entry just because I really want to cover the trade above the high. And we'll see if we don't get some type of move lower here. Very ambitious profit objective. Remember, in some of these markets like gold and crude, I'm actually doubling the profit target. And I think I heard a stop out on my NASDAQ trade. I did too. So we took a tag right here off that first micro macro cross. Again, you know, the green bar sell, not really strength-wise, not nearly the same as the first micro macro cross. So it's had a feeling we could have been in trouble there. But at least now we have a pretty good idea which way this market wants to go today. Namely, we should look to be a little bit more bullish. And the eagle coming through also. Normally, the eagle is the only tool that I'll trust an early signal on, and you can see why. Coming out of the open, we produced a nice little buy signal. While we're waiting for the next signal, let's take a look here what's going on with yesterday's eagle. And where did the market open? It opened right about here. Yeah, well, yeah, yesterday was a little bit more of a mess for the eagle. And we just got filled on our gold trade. So we're looking now for the market to continue lower below these lows. It took out some of those traders there. This is where gold got very excited before, around the 1258 mark. 1258. So you can see a little bit of buying trying to come back into the market. If we can overwhelm the buyers at this point, well then next stop down here, 1255-ish. And let's see how that corresponds to our support and resistance suite. Look at that. The median line is sitting at 1255. So we've just broken the primary resistance. Actually, here on the Falcon, we also produced a trend change signal. Looks like that was more or less in sync with the eagle signal. Now we're seeing a little bit of a reaction there. And we're waiting on our first micro macro cross lower in the hawk. So we got one first micro macro cross here, and when this one printed, no real good test of the extreme yet. Therefore, you should try to cover above the high in case you get one of those, and then here comes the test of the extreme. So we're still kind of nursing that initial first micro-macro cross, although the market went all out of sync here. See, bar colors are out of sync, trend lines are out of sync, filter is out of sync. We're coming back now with another with sync or in trend, with trend signal, that's the word, with trend, or waiting on one anyway. And so far, nothing new and exciting in the NASDAQ. Might have to wait a little while for the NQ to give us anything. Tradable, some sort of macro pullback. A late trend change signal here in the Falcon. Trend change signal coming right here, trend line changing color. There's the up, here's the down, here's the up. And we should see some follow through from there. Although the signal did print away from the trend line, didn't it? Very often when the signal prints away from the trend line, you should anticipate that the market's going to try to come back and touch that trend line. So for that reason, when the signal was printing and the trend line's way down here, once again, because you may anticipate the market coming into the trend line, you need to run your stop a little bit deeper, or as deep as you can manage anyway. See what happened here? We had the trend change signal. It doesn't matter whether it got low enough to hit the profit objective or not, but watch what happens, right? The signal prints, the market moves a little bit, and then it tries to get into the trend line. Compare that with this trend change signal, where the trend line changes color. You get your up, down, up pattern, and the market just goes straight on from there. Most times, the signal will produce very close or touching the trend line, or even through the trend line. But when the signal does produce away from the trend line, now I'm not going to be able to find you another example. Well, that's kind of a gap from the trend line. Just something to bear in mind, when it's gapping from the trend line, it will have a tendency to try to get back, touch that trend line, and then hopefully continue on. All right, well, I guess we might as well watch our gold trade here. Now we're getting a first micro-macro cross in gold. It's very deep. I would definitely want to enter below the low. Can I cover it above the high here? Oh, look at that. I can. I can get a whole single contract in play. I don't think I would be rolling my entry stop bar for bar here. Right now, I would leave it below the low. The reason is every once in a while, you're going to see one of these where it engages, and then it starts to go back here to the macro line. Oh, okay, well, this is not one of those times. Or is it? Usually, what it does is it will dip below for just, here, we'll go over. It will dip down, oops. Sorry, I got too many things going on here. It'll dip down like this, just enough to engage the order, and then what it will do is it will try to go up here and make a macro pullback signal. So you don't necessarily want in on that first little dip. This trade, it went much deeper. It wouldn't have mattered. Obviously, we put the entry below the low. It filled us anyhow, even slipped us a tick. Scoundrels. But we are near the bottom end of the trading range, or trading range. I got trading range on the brain now. We're at the bottom end of this morning's move, and it's sometimes easier shorting a retracement like a macro pullback, or something that's bouncing off of a trend line maybe, versus trying to sell down here. But it does look like gold is poised to head lower, and we're just about to hit the break-even trigger on both the Eagle trade and this Hawk trade. Hooray! Why did my break-even not move? Because my stops are not enabled. There we go. All right, so we've hit our high probability target on the Eagle. So right down here, now we can anticipate a little bit of a reaction, and this was our rule of three trade, where I forget exactly how I set it up, like this, I think, above the high. Look at that, just tag the high probability target, and now the market's starting to react to that. And I was going to say I should pop out of the Hawk trade, try to maximize some of that profit, but it backed up on me. How much did we get on that one? Oh well, we still got our scalp target. Would have been nice to get a little bit more, would have offset the early loss in the NASDAQ. All right, so the NQ heading higher, gold heading lower. You may just want to keep in the back of your mind that very often there is an inverse relationship between gold and the stock market. So if gold looks like it's going to head lower, you can usually expect the stock market to head higher, and vice versa. If it looks like the stock market's going to head higher, you can expect gold to move lower. Not always, but sometimes. Many times, I should say. And many times we see a direct relationship between the stock market and crude oil, but not this morning. Crude oil also kind of waffling. And now on the skids after that early first micro-macro cross. Hit the high probability target, full on reversal, looking to me like is it actually going to fold over, or is it going to get range bound? Actually, we had a first or a rule of three signal on the Eagle here with crude oil also. Oops, sorry. There we go. Bullish trend. 1, 2, 3 signals, counter trend. Third signal preceded by a test of the extreme. So you could be short crude oil. Can I cover up there? No, of course not. It's crude oil. Are you kidding? Can I cover it here? Yes, I can. So a chance here for crude. You would have hit the high probability target, which for the Eagle is $200 per contract. But again, because crude tends to move a little bit further, very often I will double the profit objective. And you don't have to double it. You can even increase it by 50%, right? A $300 profit here would be, well, pretty much where we're at right now. The low of this bar. Okay, the NQ still on a tear. Oh my goodness, what a morning for the NASDAQ. Well, I guess I should have covered my bases and taken one of those long trades. I don't normally offset my position though. What that means is if I'm currently short on one trade or on one tool, I don't look to go long on another. But that was a mistake today because the NQ is just going gangbusters. But I've waited this long, so we might as well wait for a little bit of profit taking or something. See if they give us a second chance, maybe off a macro pullback. We won't be the only ones looking for a second chance to participate in this move. Yeah, very strong move. Very strong move higher by NASDAQ, a strong move lower by gold, and crude oil making a pretty serious dip. And we're only a half hour into the session. I'm wondering whether or not that is the move of the day across the board here. Whoa, look at that. I thought here on the NQ, we were seeing a little bit of a hesitation here. I thought we were going to see it start to turn over. No such thing. Oh, all right. Maybe I spoke too soon. What a crazy strong trend. So here it is on the Eagle, just straight up. First sign that the sellers are actually starting to show up. It's more likely profit taking. Sure, Mo. Mo asked, Eric, can you show the first micro-macro cross on the NASDAQ here out of the open? There it is right there, Mo. This bad boy right here. And part of the reason the market took off the way it did is better seen on the Eagle, where we have this trading range. First micro-macro cross signal on the Hawk coincided with that bar right there on the Eagle. So part of the reason the market took off the way it did is we had a lot of selling going on right here, more selling right here, more selling right here, more selling right here. Look at the width of this bar relative to these other bars. There was a lot of selling here. Buyers really tried to buy the market up. Sellers came back, knocked the market down. Now in hindsight, I can tell you that this was a higher low relative to this one here, suggesting that the buyers had control of the market. But honestly, it's not enough to really say the market has emerged from the trading range. There was a very real possibility that the market would get knocked down here and go back into the trading range. As we can tell from the width of this bar also. You know, a lot of active buying and selling was going on there. A lot of volume went through on this particular bar. But when this level failed, all of a sudden all these traders who shorted through the overnight and shorted out of the open, thinking the market must move lower, found themselves on the wrong side of the market and started ditching their positions. Well, if you're shorting here, your exit stop is a buy order. So you've got sellers exiting on buy orders. You have buyers buying on buy orders. And of course, the market moves higher. You can see there was a little bit of selling through here and even through here. And when these guys had to get out, well, then it just spurred the market higher still. So that's why we saw that very pronounced, very fast move out of the NASDAQ this morning. Of course, much easier to see in hindsight. The tools did pick it up. I just got myself stuck on the wrong side of the trade. Unfortunately for me. Fortunately for me, the gold trade came through. But now we're in a position where we're kind of holding. Oh, we did get a late filter entry signal here. And of course, it's very, very late in the trend. So that always makes you wonder, how far do I have to cover this trade? Well, we could try to get a second push on here. Can I cover all the way to the low? No, of course not. Can I cover to the median line? Nope, can't do that either. Can I cover to the primary support or resistance? Oh, shoot, can't do that either. All right, well, you know what? There comes a point where sometimes you just can't afford the trade. Sometimes the market condition is such that you just have to wait it out. Wait for something more promising. great question here from Mo. Mo asks one other question. Like today, I hear on the radio before the open that the futures are up big, like the NASDAQ. Can this be a good indicator to go long at the open even before the market opens? Or is that not a good practice? It seems that they took the NQ back a bit before the open and then it headed higher at the bell. We'll take a look here at the Hawk. Now, about an hour before the market opens, it actually gets very active. A lot of times there's pre-market reports, things that will influence the market anyway. So even though the market opens at 6:30 my time, 9:30 in the East, about an hour before you're going to start to see there could be a rather pronounced move, either higher or lower. Now, not huge, but certainly bigger sometimes than some of the moves that you see during the overnight. Traders will very often look at that and say, oh, the market's going to be bullish today, or it's going to be bearish today. But you see, even here, it's hard to tell, right? Because here's 5:30 my time. Sure, the market made a move up, but it also made an equal move down. So which is it going to be? My own personal opinion, Mo, is that you should make your own opinion. I don't listen to the other news. I don't listen to the talking heads. The reason is, well, the reason I believe is because they make the news to fit what's happening, right? For a news reporter, the world is driven by news, right? They see everything through a news filter, if you will. My mistake was the market went one tick too low. See, I took this, had I taken the first green bar sell signal right here, I wouldn't have been filled. My mistake was I took the second green bar sell signal and I took it on the hash mark, and the market came down one tick too low, filled the order, and then went the other way. What I should have done is I should have reversed on the order based on the strength of the first micro-macro cross, right? Based on the fact that it's a first micro-macro cross signal and it's a high probability trade, I should have reversed on the order, and I would have at least gained back what I had lost. But yeah, the reason I don't pay that much attention to the news is, well, reporters think there's always news that's behind everything, right? A police car goes screaming down the road. Well, there's obviously a reason the police car is screaming down the road. That's news. Why is the police car moving so fast? The NASDAQ rallied today, or out of the open. Why? Why is that? And so they'll be scouring the news cycle trying to find reasons. You know, Steve Jobs spotted at a 7-Eleven in San Jose. So, boom, Apple stock goes through the roof. The NASDAQ rallies like crazy. But really, it rallied because, and I'm going to show you here on the Eagle because it's easier to see, it rallied because it found support. It found support at 43.30. Remember 43.35? Very important number for us yesterday, wasn't it? I think that was near the high of the day yesterday. And the day before that, 43.30, 35 were important numbers. So the market found support. Technically, it broke resistance. Technically, it also made a higher low. So it was finding support, buyers were getting more active. But the talking heads really don't know more than you do. But one thing that the talking heads do correctly that I think is they look at trading the way traders look at it. Traders don't look at a chart and say, there's an abandoned baby pattern, an abandoned baby candlestick pattern, or we have a shooting star pattern, or we have a dark cloud cover, or whatever. There's all these different candlestick patterns. The talking heads will look at it and they'll say, oh, the market's trading off support. Are we going to get a reaction higher? Market is trading at resistance. Are we going to see a breakout, or are we going to see a reaction lower? Oh, I see. Mo says it wasn't really the talking heads, rather the futures numbers from the overnight. I don't know, Mo. I'm reading your other comment here. Mo says, I just wondered that when you hear that at the open, it could be better than average catalyst to go higher at the open, whether it's worth trying. I suppose, it's always worth trying. We did get the red bar buy signal here. And we had comparable buy signals in the other tools as well. Out of the open, I'll usually go in with a onesie, try not to overextend myself too much in case I'm wrong. And that would have been a very nice, very profitable little move. I would watch it for a while, Mo. If you're checking the overnight volume and it seems like it's going to be bullish out of the open, see how it reacts. And likewise, if it's bearish, if it seems to be stacking, that's really the best way, I guess. Yeah, Mo says, like anything, I guess it's a gut play, something to keep an eye on. That first trade of the day is always a little bit of a, like you say, a gut play, a little bit of a crapshoot, if you will. Those overnight numbers that you're referring to probably started here with the Asian session. And again, in hindsight, this is all easy to see, right? Like Ray Burke always used to like to say, trading the left side of the chart is easy. So you get the market bottoming out yesterday, and you see this nice steady progression through the Asian session, and then we hit this little sideways congestion period, and then we get another leg up. Chartists will see this as a classic chart pattern. And bear with me here while I just kind of sketch this out for you. Okay, many of you will have heard the name Richard Wyckoff. Richard Wyckoff is considered to be the father of modern charting for many. He was around the times like in the 1920s and 30s with Charles Dow and all these people who first started taking a more public look into the stock market. And the stock market was getting very exciting and very popular back in those days, of course, before the big crash. But Richard Wyckoff said that the market goes through these certain phases. First, there's I should have started at the bottom. All right, let's do it this way. First, he says there's an accumulation phase where the market is more or less sideways and buyers are accumulating stocks. From here, the accumulation phase will break out. Very often there will be a little bit of a pause where there's more accumulation going on. Sometimes this pause actually looks more like a great big pullback. And then you're going to get one more rally, after which time it enters a distribution phase where the buyers unload their stocks, sellers start to load up, and then guess what? The market goes the other way, and the whole cycle repeats itself. You get the second distribution phase, and then the market heads lower, and then you get accumulation again, and the whole thing starts going the other way again. So what we've been seeing here in the NASDAQ, oops, I just deleted all my lines, is kind of exactly that. I won't go back and redo all that again, but you see how the market, oops, doggone it, how the market's kind of going sideways through here? This is our accumulation phase. Then it breaks out, then it pauses, and then it breaks out higher. So what's going to happen here? Well, it's likely we could enter a distribution phase where the market starts to channel, starts to go sideways a little bit, and then we'll try to break out lower. Is that guaranteed? No, of course not. This may be another pause, another secondary accumulation phase before the market tries to go higher still. But it is something to bear in mind that the markets go through these periods where they rally, then they go sideways. Then they rally, then they go sideways. They very rarely will make a straight line to their target. This is exceptional. This does not happen very often. Normally what will happen is, oh, here, let's go back. They'll go down a little, they'll come up a little. They'll go down a little, they'll come up a little. They'll go down or sideways, then they'll go down, and then they'll go up a little, and they'll go down, and they'll go up a little. That's what happens most times, right? That's kind of the ebb and flow of the market. But to see it just rally like this without any hesitation whatsoever, that's very, very rare. Very strong market. Although a lot of that early momentum seems to have waned. Mo asks, maybe the Asian and London Open is fueling strength into our Open or vice versa. Again, you know, Mo, it's one of these things traders try to deal with, and some will say yes and others will say no. For every day that you see the market continue the overnight session, like the Asian and the European, you'll find a day that it will reverse on itself. I honestly think I'm a firm believer that you just have to trade what's in front of you. And I know we're always trying to get a handle on where the market's going to go next. Trend line. Draw yourself a trend line. That's as good a tool as any for trying to forecast where the market's going to go. There you go. Hard edge. Hard edge retracement seems likely. Draw yourself lines across the swing highs and lows, and you'll see, oh, okay, the market's made a lower swing high relative to this one. Here, well, let's play with this. Let's roll this over and we'll pretend it's going real time. The market has made a lower swing high relative to this one. Now we need to see the market make a lower swing low. Has not done it. Matching swing highs. That's actually quite bearish. Okay, now the market has made a lower swing low. At this point, I would be getting much more bearish on this market. We have lower swing highs and even matching highs, even a double top, if you will. And now we've made a lower swing low. This market is now technically bearish, although according to the band, it is still bullish. So it's actually both. It's bullish, but it's starting to get bearish also. So we wait. And at this point, I would expect a little bit of a rally, one more failure, and then I would come back and I would have my rule of three signal. That's what I would be expecting from the market. All right, so here they come. I'm thinking, okay, here's my failure. I'm going to get my rule of three. But what happens instead? Oh, the market makes a new high. Market comes down, and now it makes a higher swing low. Well, guess what? Now we're technically bullish again, aren't we? We've made a new high and a higher swing low. So if you want to get a feel for what's going on in the market, you'll probably do better following stuff like that. Now let's give it the big test. Let's roll it back here because this was an ugly, choppy session. All right, so we've made a lower low and we've also made a lower high. So right now, this market is bearish. Uh-oh, we've just made a higher high relative to this one. Uh-oh, we've just made a higher low relative to that one. Things are starting to look a little less bearish now, aren't they? We've made another higher high, and now we're making a higher low. Might this be worth trying to buy? Well, yeah, I think so. It's a trend change signal. Well, technically, we had a rule of three signal right here, even though it was only two signals counter trend. The principle remains the same, so you could be long already from right here and hit your profit target. But here's another buy signal. Is the market getting more bullish? Yes, definitely it is. You can see that. We're making higher lows. We're making higher highs. This is now a more bullish market. Can I tell you with 100% certainty that the market's going to go higher from here? No, of course not. But the odds are that the market is going to try to rally from there. Okay, failed to put in a new high. Uh-oh. Now we're trying to put in a new low. Is this going to hold, or is the market just sorting itself out? Last chance for the buyers, by the way. If it fails here, we already have a new low, and it's likely to continue lower. Big test. Oh, okay. So the buyers do, in fact, have the market in hand. So you can do that very simple analysis and just Get a feel for who controls the market. Don't be afraid because the market just breaches a little bit. You'll see these tiny little breaches, and then you'll see, in this case, the buyers try to recover the market higher. And did that come off the trend line? I bet you it's very close. See, the buyers started to get interested as the market got back down here toward this trend line. And likewise, the sellers will have done the opposite. As the market gets closer to the trend line, they're going to try to sell it. It broke through here a little bit. They tried to recover it. They couldn't hold it. And then we started putting in higher highs relative to the previous ones. Right? So you're always going to get some sort of information from the market itself. I prefer to take my information from the chart because, well, that's where the buyers and sellers are putting their money. Right? They're putting their money where their mouth is, quite literally. So, if you keep an eye on that, I think you'll do a little better than trying to second guess what the market's going to do relative to the overnight session. Sometimes the overnight session will flow into the morning session, and other times the market will just back up and take away everything that happened in the overnight. Curtis asked, is this what leads to market profile? Yes. Market profile, for those of you unfamiliar with the term, is, well, many of you will have heard of a bell curve. A bell curve is a statistical type of formation, and sorry, I can't draw a curve. Imagine this curve to look like a bell, hence the name. And what they theorize is that 70% of all activity occurs within the majority of the bell. This accounts for 70% of all activity, and the remaining 30% or 30% is outside of this curve. So this is going to be the most influential part of this series of data. What traders have done is they've turned the bell curve on its side because traders, being the clever people they are, turn the bell curve on its side and they say, okay, if this was the market's range yesterday price-wise, this contains 70% of the price. The logic is, if the market gets outside of that range, it will continue higher. If the market gets below that range, it will continue lower. If the market starts outside this range, well, this is where it gets a little tricky. If the market starts outside this range, it will continue higher because it's very bullish. If the market starts outside this range, it will continue lower because it's very bearish. If the market starts outside this range and gets inside the range, then it's going to try to get back to the mean, the middle, or sometimes there's a price that has the most volume for the day, and that's called the point of control. Fancy name for saying this was the most popular price. And the logic is that the market will try to get back to that very, very popular price. All right, so there's market profile in a nutshell. It does have some merit. If the market does get inside the market profile range, there is a tendency for it to try to normalize. The problem with market profile is it's always based on the previous day's price action. Yes, you can get market profile for the current day as well. This market profile curve is probably skewed heavily to the top because seems to be where most of the volume is going on right now. And there's probably a small market profile curve down here also. Very, very little going on through the middle, and yet that's where the biggest price activity happened. You can guesstimate your market profile, and I'm going to get to Rod's question here because he's asking about the Falcon. He's saying the Falcon just produced a trend change signal but did not sink in time to make the move. Is that a signal that we should take later? Okay, so Rod may be referring to this. I would not refer to that as a trend change signal because my trend line is still green. You could view this as a double dot signal, which is our counter trend signal, which I don't point out very often to you. Because what happens is if this market is declining, it will give you a trend change signal. So you short from here, the market comes down a little bit, it's going to come back, you're going to produce a sell signal if it's truly turning over, and it won't be too far from here. The reason you don't want to get anxious about selling those, well, hey, you had another double dot signal right here. Look what would have happened if you had sold this one. Right? The market can't possibly go higher. Sure it can. Right? These signals are only obvious in hindsight. No, wait for the signal to actually unfold. Sometimes when the market's moving a little bit fast, it will drift a little ways. You know, it tried to produce a trend change signal right here, unsuccessfully. The market was just too strong, came up here, produced the trend change signal. But when we got the signal, that was when the probabilities were in our favor. But market profile, you can guesstimate as well. So let's take a look here. I'm going to use the eagle just because it kind of condenses the market activity a little bit better. So here is the eagle. This looks like this was the low yesterday. And this was the high. Now I'm only doing the day session, right? I'm not doing the overnight. So here's your range. Where would you say encompasses about 70% of this day's trading? Well, eyeballing it, I'd probably say right about here and probably right about there. Maybe, yeah. Yeah, that'd be pretty close, I think. Maybe even a little bit tighter. Where would you place a point of control? What looks to be a very popular price? Well, probably right through here. 4,300, 4,301 even. Okay, so I don't have the figures for the market profile, but I bet you that's pretty darn close. So what happened today? Well, the market opened right here, well above the top end of the market profile, and never looked back, just kept on going. Right? So here's a day where the market profile doesn't really do much for us. So like most things trading related, it has value, but it's not the be all end all. It's like Adam says, there is a holy grail in trading. It's just not what you think it is. It's not that final little tweak to your stochastic indicator. It's not coupling Keltner bands with Bollinger bands and throwing a whatever, triple exponential moving average. Oh my gosh, does anybody really use that? A triple exponential moving average, like an exponential moving average wasn't fast enough. If you want, price is the ultimate indicator, folks. Watch what's going on with your prices. Watch and see where are the buyers? Where are the buyers? Well, the buyers are right here. Obviously, the buyers are down here. All through here. Where are the sellers? Well, there's some selling up here. Obviously, that's what stopped the market. Or the buyers totally lost interest buying at that price. A little bit of buying going on here. Well, if the sellers come back down and we get a soft edge sell signal here, you think maybe that might be worth trying? Well, maybe. You know, it's obviously a strong uptrend. I wouldn't expect a major retracement, but you know, the hard edge would be our target, 43.50. Seems like a plausible objective even. Enough that I could perhaps get in and out with certainly a scalp target, even given this insanely strong uptrend. We have, after all, broken the trend line. If we see the buyers fail now to recover the uptrend, well, the sellers are going to take a whack at it, aren't they? And you need to remember, too, that a lot of trading nowadays is computer driven. You know, something in the algorithm will trip and the buy programs are launched on the computers. Sometimes it's just a matter of, you know, a trader has got 1,000 buy orders he's got to get into the market. Well, he'll just start buying. I do believe the market is bullish today. I would be hesitant about selling, but if the proper sell signal presents itself, why not? You know, same thing here on the Falcon. We're working on a possible trend change signal. I don't know if there's another news item due out or something. I can't tell you exactly why the market has paused the way it has. But it's certainly not unusual to see a pause after a big rally. All right, so here come the buyers now, producing another buy signal here on the Eagle. It's against the ATR. See if it flips that ATR over. Also getting a buy signal here on the Raptor. Now, this is a hard edge bounce. It's a valid buy signal. But it's one of these signals you're going to take and you're not going to know. You're not going to know whether the market will follow through from here or whether it's going to fold over on itself and head lower. There is no way to know. So what do? Well, you try to protect yourself, right? You try to minimize your risk exposure, maybe look for a second push on the entry, right? So we've let the signal engage. Let's see if the bar retreats a little bit and gets more bearish looking, at which time we can roll our entry in above the high, try to get a second push on the momentum. See, the Geiger counter is looking very bullish here. Had a lot of buying. If it doesn't follow through on the buy side though, then we would anticipate that the market's going to head lower. And like I said, there is no way to know. This is very much a 50-50 proposition. Well, maybe 60-40 because we do have a buy signal. It is a hard edge bounce. But it's not like your first micro macro cross signal where you have, nearly an 80% chance or better. I hesitate to quote figures like that, but the fact of the matter is it's an 83% probability that that first micro macro cross will work out. This is more like a 60-40 trade. So I guess I better get a stop and play here. Wouldn't that be a good idea? So we'll have a stop below the swing low, which seems prudent. And now we're up here challenging the highs. And I've only gone in with a single. I don't want to overcommit. If this trade fails, well, there's a good chance it's going to go down here to 43.50. If I want to hold that long, well, then I need to put my stops down below there and hope that I can ride out the swing. Actually, this might have been one to take right on the hash mark. Why? Well, because these highs here is where if we're going to stumble, that's where we're going to stumble. Entering earlier would allow me to get that trade safely to break even, give me a little bit more room to ride out a reaction. All right, so we've hit the break-even trigger. I guess I'd better enable that so we can get to the break-even stop. That's all we're going to give them right there. So if there's a reaction now to the highs, while we're out at break-even, there's $75 in profit if you want it. Nothing wrong with that. Hitting the close button. In fact, if I were smart, I would probably take it. Come on. Don't look back too far now. And just going back to Rod's comment earlier about the Falcon, see that again, that's why you don't want to get in too early. If the trend change signal is going to produce, it will produce a sell signal here. In this case, of course, no follow through on the trend change signal. right now it looks like it's the eagle and the raptor that are producing the signals. And what do we have here now? Oh, still in the same neighborhood. Come on, get up there. All right, come on. Let's see if we get that, if we can salvage this bar. There we go. Okay, so now we've got a tail on this bar. That's good for us. If we get a little bit of room here, I'll move to a more aggressive stop strategy, perhaps the bar high low or even the parabolics. Try to protect some of that open profit in case there's another quick little reaction here. But it's looking as though we could see a pretty decent move higher if we can string a couple of these bullish bars together. You see the sellers trying to sell again. If the buyers take this bar away, it's going to be similar to what we saw here. You know, sellers try to sell, buyers take the bar away. Sellers try to sell, buyers take the bar away. Sellers try to sell, buyers come back in and just knock them all over. No, they're starting to fail. That was kind of maybe the last press higher. Come on. Giddy up. Get going. Get going. Yeah. Oh well. Again, it was worth a try. I was just as happy to get that trade to break even and get stopped out there, even if we see the market reverse here and head higher. Like I said, it was a lower probability signal, but still, it was a signal that was worth trying. Providing, of course, you don't place yourself at too great a risk doing it. All right, you guys, I think we're going to close up the room here. I've got an appointment I need to be at in an hour, and it seems like the move of the day is done. I think if you're going to hang around today, we're very likely going to see more of a sideways market. Maybe, just maybe, a little bit of a decline to the 43.50 area, which would, again, put us very close to the hard edge here on the Raptor and the Eagle. But I don't think we're going to see any real major move. That's my guesstimate anyways. That tends to happen after the market has made a very, very quick move like what we saw here this morning. Quick reminder, no trading room on Monday. I'm not going to be available on Monday, but I will see you guys again on Tuesday. So have yourselves a wonderful weekend, and we'll talk to you Tuesday morning. Bye for now.